Let's start in the US, where the government has shut down for the first time in almost 7 years after lawmakers failed to pass a last-ditch funding plan.
Welcome back. Today, we're not tracking a Fed pivot or a global conflict. We're tracking a slow-motion catastrophe in Washington, D.C., the U.S. government shutdown. This isn't a typical political standoff. Now, for the first time, a shutdown is being weaponized, not to pause government, but to shrink it permanently. This is about mass layoffs, dismantling entire federal programs. Hundreds of thousands are missing paychecks. For traders, the stakes are huge. The data pipeline feeding the Fed is drying up, and without data, policy becomes guesswork. Can markets ignore Washington's chaos, or is this the black swan that cracks U.S. governance and raises the risk premium? Let's break down the risks, the history, and trading setups to watch. The government officially shut down at midnight October 1st. We're now in week 5. Shutdowns happen when Congress fails to pass spending bills. About 750,000 federal workers are furloughed or unpaid. Essential employees, like air traffic controllers, they work on IOUs. Non-essential services, museums, permits, even Social Security verifications are frozen. Now, since 1976, the U.S. has had 21 shutdowns, mostly short and political. But 2025's shutdown is different, systematic, not transactional. It's powered by ideology. The weaponization lies in RIF, reduction in force. And unlike past shutdowns where furloughed employees got back pay, this time permanent layoffs are authorized. The economic fallout is $400 million a day. However, it is the threat of permanent job destruction that has caused the political backlash to spread faster than any market alert. Millions are protesting nationwide in the No Kings movement, decrying creeping authoritarianism and the attempt to structurally shrink government. Trump's response? Mockery. AI-generated videos of himself with a golden crown. And for Democrats, protests are a hopeful signal, but converting outrage into votes remains uncertain. Now, while the streets echo with political fury, traders focus on another battlefield, the flow of information itself. For traders, the biggest risk isn't what's closed, it's what's invisible. The missing government data that drives macro trades. And historically, markets shrug off shutdowns. In 2013, during a 16-day shutdown, the S&P rose 3%. And during the 2018 through 2019 shutdown, it actually jumped 10%. Equities now hold near record highs. Fueled by AI optimism, the subtle story is in treasuries and the data void. Yields drift lower as uncertainty nudges investors into safe assets. Without government data, private data like ADP suddenly moves markets. 1 week ADP report triggered a major bond rally. Now, if the shutdown continues, key economic releases may be missed entirely, creating a chaos. So where does this go next? Traders must balance short-term noise with long-term structural risk. Key threats: 1 is the Fed paralysis. Without jobs and retail data, the Fed is flying blind. On Friday, a ray of hope came when the Bureau of Labor Statistics finally released the CPI data. A late October rate cut boosted sentiments. But beyond that, policy clarity fades, and expect more volatility in tips and Fed funds. Number 2 is a sector risk. Defense, infrastructure, and health companies reliant on federal funding could face sharper pain the longer this drags on. This isn't just another shutdown, it's a weaponized tool. Temporary pain is becoming permanent through RIFs, reduction in force letters. Markets may look calm, but the data blackout increases the odds of policy mistakes. The visible pain is short-term, but institutional damage quietly erodes confidence. Wall Street sees headline risk, not fundamental risk for now. Every day this drags on, America's governance premium creeps higher. Trade smart, stay hedged, don't trust a sleepy VIX. When Washington swaps the pause button for the delete key, consequences can outlast any rally. If you found this analysis valuable, hit the like, subscribe, and comment. And please, stay ahead of the chaos.